Welcome to Markets Now. I'm Michelle Rook, along with Vince Boddicker with Farmers Trading Company. Livestock futures mixed with cattle higher, hogs lower. Over in the grains, we're mostly higher, I believe, except for spring wheat right now. And Vince, let's talk first of all about this wheat market. It looks like we're maybe trying to put a little geopolitical risk premium into that market.
It does, as you and I discussed in there, the Russians talking about Cargill is going to pull out of there in July 1st. The Russians want to control everything the way it sounds, and it'd be interesting to see if any other companies decide to make that same move or just where they're at. And you look at that Kansas City May this morning, came right up to my 200 period moving average, which I think could be big resistance in here, at least short term, unless we find some other news and see if we get some rains the next few weeks in the southern plains. If not, then maybe we've got some more to go.
Yeah, do you think we have enough weather premium in the market, or even war premium for that matter?
I don't know. That's a tough one of, how do you gauge that or where should it be? I don't know for sure, Michelle. Did we change the attitude? And I think we had a psychology thing that we did 3-4 weeks ago, if not longer, on the corn and the wheat and the beans. Kind of took that over last week, and I think you need to change it. And when you look at how strong things are, you would say maybe we did, but I'm just not sure we have yet.
Yeah, we'll see if we get enough technical signals, at least in the wheat market, to get some of these funds to cover their shorts and get out of some of those positions. That would certainly help. So the corn market has gotten a little help from wheat, but really corn has been driven here by this demand, this export demand that's been coming at the market. China in for another 8 million bushels this morning. Do you sense that they're going to continue to buy, or are we just about out of business with them for a little while?
I don't know. It's so much as how much stocks do they want to build up? What do they need to build up? We know that there probably isn't a lot of other suppliers to get corn from for the next 2 or 3 months until we get to late May, early June, when that safrinha crop comes in Brazil. Then would become a different story. But I would think for the next month or so, if they need it, they're still going to buy here to get it in time.
Yeah, corn, though, has had a pretty good run, and we're up into some chart resistance. So how much farther do you think we can go here?
You wondered when it came off of the bottom if that lead month couldn't get to the 200 period moving average, which is right around 660 in May. We got close to it this morning. Whether we do a lot more, I'm not sure. I think if you're going to do much more than that, you have to find some surprises on Friday's report, whether that be planted acres or whether it be stocks in here. But otherwise, I think that might be the end of it. We shouldn't forget of how quick these markets, when they get to a certain point, you think they keep going, but they can stop and turn on a dime.
Yeah, and we've had such volatility with those reports that come at the end of March, especially prospective plantings. Kind of want to hold or reserve judgment until that point in time. So soybeans have had a pretty good recovery off of the lows here that we set last week, and we've retraced about half of that. Do you think we can go farther, or again, are we running up into chart resistance?
I think you're going to run into chart resistance up here. My May contract got right to my 20 period, a little bit through that 50% retracement. And if you go back to 3-4 days ago, you would have been amazed to think it got this far. And we can't forget that basis is ugly in Brazil. I think as of last Thursday or Friday, beans FOB the United States, Brazil was $1.50 cheaper than we were, and that was when they were looking at the story that there was an entity that was going to import a couple of cargoes from Brazil. Whether that ever happens or not, we'll find out. But I don't think that price differentiation changed much.
Yeah, and then you got to wonder if maybe the funds will just kind of sit here and wait until we get the report out on Friday before they do anything else.
Well, then I'm a little surprised maybe we dove in as hard as we did. More last week, they worried about all the geoeconomic stuff or the macroeconomics with the banks and those things, and hard to believe that they would think that that's all solved already.
Yeah, and the cattle traded that too, Vince. But it looks like cooler heads have prevailed here. We've been up 4 days in the live cattle futures. Will that market be able to build on this much more until cash pushes it or not?
I think it's going to be a little tough to think you can do a lot more than the 65, 66 in here until we come back and see where where cash comes in. If you can get cash to push in 66, 67 area, then you're fine. And as we get into April and May, and especially June, you're going to get booked numbers way down in June. That'll be interesting to see where demand's at when we get to that point.
Yeah. What about the feeder market? Cash market's really been strong up in the north, hasn't it?
It has, and I think that's what started driving it on Monday morning, and probably driving it again today. That market is good. I would still think that as we approach the last highs that we had, if we get through it, great, watch a little bit. If not, it may not be a bad idea with all the uncertainty in the rest of the world economically and banking things. Throw some protection on. I guess my preference would be whether that be options or LRP. I think you got to do one of those two, and really not try to sell the futures up here with the potential explosive nature that we have with the short numbers that we'll experience.
Yeah.
Taking that, much less the cow kill, is slowing way down, and I think that's another positive.
Well, and you never know what the funds are going to do. I mean, they had a hefty long position. Man, they got out a lot of long positions here coming into the last 2 weeks, didn't they?
Yes. Yes, they did. 29,000, I think, on that last commitment to traders report, which is record and huge. And they're still long plenty, but gives them some more ammunition.
And the hog market, funds are actually short there, if not record, near record. And what's the problem? Is it all been technical in nature, or are we seeing fundamental problems here because the index can't get caught up to where the futures are?
I think you got some technical things in there, but I think we have to remember that a couple of weeks ago we took $20 off of hams, and that really took into the account packer profit margin. And then if you go beyond that point, we've had plenty of stocks of bellies for the last 2 or 3 months, and I don't see that changing. So I think part of that trader's thought is that somewhere in here we should be putting a bottom in late March, early April seasonally. But can we do that and get our big summer run just because of the stocks of ham and bellies?
Yeah, it's been a wicked pullback, that's for sure. Hopefully, maybe we'll get some short coming here end of the month or end of the quarter after this hogs and pigs report is out of the way here. Do you think that's going to show maybe a little expansion, or what are you expecting tomorrow?
From the numbers that I've seen, anywhere from 100 to 100.8%. And if we look at previous the December report, we should actually be killing less hogs than we did last year, and we're killing about 0.4% more, I think, the last month or two. So that weighs on the market and says, how far off were they really?
Yeah, we'll see. A lot of people think that maybe the hogs and pigs report has been off. That's for sure. All right. Thanks for joining us. Vince Boddicker with Farmers Trading Company, and that's Markets Now.